Shalom, 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 everybody. Welcome to the earnings show. Like last earnings, we're here live. And so earnings just dropped a few minutes ago, and we have the conference call coming out in a few minutes. All I ask is that you guys smash that like button, right? And so let's wait just a few seconds for people to jump in. AMC is moving very nicely here after hours, over above 35.6. We've got a new high here, intraday high. So very, very nice situation that we have here currently with AMC, and after the numbers have dropped. So we have the numbers here in a short form. Let me bring that up. Where is it? Here. So this is the short form that we have here from Bazinga. So we have here AMC earnings, EPS loss of 0.71, beats 0.93 estimate, and sales are 444.0 million, beats the 375.28 million. So they beat by this is what, 45 and 25. That's around $70 million that they beat here, right? Very, very nice, very nice beat. And so this is the current situation with AMC. Hello, everybody. Don't forget to smash the like button. How do I pop out the chat? Here we go. Okay. Pop out the chat. Hello to everybody. This is the chat pop out. What's going on? My computer just went a little bit. Here we go. So we have also the statement from Adam Aaron dropped. Let me bring that up as well. Where are you? Here we go. Let's just check what AMC is doing now. Going up, you can see there was once the earnings dropped, they tried to short here, right? There was a big candle drop down, and then it went all the way up, and then it went back. It was like really wild these first few minutes after it dropped, and so now it's going up really nice. How much is it already up after market? It is up. My app is not updating here. 6%, 6.3% here after market. So very, very nice situation that we have here. Don't forget to smash the like button, guys. Smash the like button. Shalomi to my homies. Shalom aleichem. Salam alaikum. Everybody that's joining us, hello in English, right? So let's bring up the numbers here that we have and what Adam had to say. So this is very. I've already read this. I started this stream after I read this because I wanted to be prepared, right? It's always good to be prepared for a live stream, not just winging it, telling dad jokes and things like that. So as of June 30th, 2021, AMC operated 593 domestic theaters, representing 100% of its domestic theaters, and 335 international theaters, representing approximately 95% of its international theaters. The majority of international theaters operations were suspended the first 2 months of the second quarter and did not reopen until early June. So all of this happened, although most of the international theaters, which I think that are mostly in the UK, if I'm not mistaken, were closed. UK has been having their issues. They were on total lockdown a few months ago. Then they got out, and then they're back in. It's a not the best situation in the UK, but they got to these great numbers, even though that the majority of the international theaters were closed in the second quarter. And now Adam came up and said here this statement. So he commented. And by the way, guys, we're going to talk a little bit about AMC for the next around 30 minutes. And then at 12 o'clock for me, 4 p.m. Central Time, we're going to listen to the conference call, and so then I'll be quiet, and if you want you can stay on and just mute me and watch it without delay. So we'll talk about that when we get to it. So Adam Aaron, chairman and CEO of AMC, commented, the second quarter of 2021 was transformational for AMC. We raised yet another $1.25 billion of new equity capital before commissions and fees, of course, in the quarter, boosting our quarter-ending liquidity to more than $2 billion. So great, share. Well, not great for the squeeze, right? But great for the bottom line of the company, and it gives them flexibility going forward, that they have this cash in their back pocket, that if they need to, let me, so we can get like also the price action here. I don't know if it will let me, because they have too many screens. Let's see. Technical difficulty time, right, guys? It's not what I want. Okay, it's not letting me do that. Okay, anyway, so they have now this money in their back pocket, and it could be very beneficial for them in the future. The fact that they have this money, and if there's another situation where they have to close a significant amount of the theaters, then they have this money that can keep them afloat in a situation like we saw in 2020. And we'll get to the numbers from 2020, and you'll see it's like kind of let me just fix the camera here. Wait. Here we go. There was a situation where they were like no income. So you would think to yourself, well, companies like Microsoft and Apple and Google and Facebook made tons of money in 2020, and our guys AMC, they almost didn't make anything. And so it's, it was a rough year, and 2021 has been great for that recovery. Boosting our quarter ending liquidity to more than $2 billion, including cash and undrawn revolving lines of credit, which is about double the previous highest ever such mark in AMC's 101 history. We believe this gives AMC financial staying power to navigate bloody amidst the virus waters, and by June 30th, substantially all of our theaters were open again to entertain and delight our guests. Thanks to increased vaccination counts in the countries we serve, we started to see a rise in moving-going demand, and we safely welcomed back 22 million guests back to our theaters across the globe during the course of the second quarter. New blockbuster films released in the quarter drove successive new pandemic-era box office records, which is great. And fortunately for us, and I love this statement, as guests returned to our theaters, they splurged on our food and beverages offerings. So this is you guys, like the apes, because I live in Israel, as you know, right? Or you don't know if you're new to the channel. And we don't have any AMCs, right? So, and the movie theaters just opened up I think a month ago or something like that. For a long time, the country was released, but we didn't have movie theaters. We didn't have, shows, and we didn't have plays and things like that. And so now they're opening it back up, and now we're having this Delta thing. So we'll see. It will be interesting. So the fact that the apes are going to the movie theaters, buying lots of popcorn and nachos and Coca-Cola and things like that is great. And you guys are saying it's going up. Wow, 10%. Okay, let me switch back to it for a second just to see what's going on. Amazing, guys. It's popping here, popping in the club. Wait, no, I messed up that song. How does that song go? I think it's Kesha. No, let me just drink a little bit of water here from my Moneymaker mug. If you're interested in the swag shop, you see here in the description down below. Very, very nice. We'll see how it starts popping once the conference call starts, because I think that's going to really move the needle if it's very, very bullish, right? So let's continue with the statement here. I love that comment about the nachos, right? About the concession. So and he says, which admittedly is quite high margin business. This is basically how they make their money, and they don't really, make money on the movies themselves. It's basically break even, and so the theaters and the movie theaters itself and the people that make the movies, there's like a profit sharing, but it doesn't come really profitable for them. There was a question here: are you going to broadcast the earnings? Yes, but I'm probably going to be quiet, and I might even shut off my camera. But we'll have it live if you are interested in staying on with me for that. Guys, just don't forget to smash the like button. There's 364 of you guys here and only 96 likes, right? So let's smash the like button, and I'll sing you my famous like song for the live streams, where I sing ole ole ole, which in Hebrew means going up. So enjoy the song and smash the like button. Ole 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 ole. Ole, 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 and AMC is going up too, so that's amazing. I think my singing is helping. It's really helping the. So let's get back to the statement. So I really like the fact that he talked about this, and he says, at the same time, right, they had a lot of good earnings, but we diligently managed our costs in every aspect of our operations. These actions produced financial results in the quarter that we consider to be well ahead of our own and third-party expectations. So we just talked about it. They beat by $75 million, and for a company that's only making, their revenue here, or this is the sales, right? Sales it's not revenue. Revenue they lost, like the total amount, the revenue they lost, but their sales were 444 million, and 75 million is almost 25%. It's like maybe 20%, I think, right? Let's do the calculation just so I don't come out 444. Yeah, so it's 16%. So I was close with the 20, 17%. So it's 17% above the expectation, and I was just reading the the comments. Avi, the best description of you is a dad. Love it. Well, yeah, you guys know that I am a dad, so that makes sense. I'm kind of a nerd too. I'm kind of a nerd. I used to have glasses, right? I'm a pretty big nerd. So I'm a dad and a nerd, and I try to be the best dad I can be. This job, this YouTube job is giving me the opportunity to be with my kids more. So so that's something that I'm really taking in and not taking for granted. So let's continue here. So Aaron added, AMC's journey through the pandemic is not finished, and we are not yet out of the woods. However, while there is no guarantees as what the future will bring in a still infection-impacted world, one can look ahead and envision a happy Hollywood ending to the story. We would like to think that someday when movies are filmed about AMC and the pandemic, its title will be one compelling world recovery, but only time will tell. So do you think that they're going to, cast me in the movie? And if so, who would play me? So I've seen like Ferris Bueller, like the guy that plays Ferris Bueller, Adam Sandler, right? Some people said because it kind of looks like me, and he's Jewish too. He knows a little bit of Hebrew. Also, Sacha Baron Cohen also knows Hebrew, so maybe like they would want to, Borat and Ali G. Maybe they would want to have him as Avi. I don't know, maybe. These are just, and there's also an Israeli guy, if you've seen the show, The Boys. Frenchie, the guy that plays Frenchie, is also Israeli, so maybe he's a younger guy. Maybe he's already in Hollywood. Maybe they would want him to play me. I don't know. It would be funny, Chris Rock. I don't know if that would work, but does he know Hebrew? So Aaron concluded it is Also worth noting that our sheer will drive through this crisis clearly resonated amongst those who were committed to our survival, because seeing movies in theaters has been a central part of the cultural fabric of society, the world, over decades and decades and decades. There are many who shared our passion that moviegoing at our theaters should continue for future generations. Accordingly, we are ever so grateful to the friends and allies that AMC gathered along the way. They can take comfort in knowing that we will build our company. Our deeper cash reserves allow us to stay the course, to innovation again, and to capitalize on opportunities around us. In short, as the largest movie theater operator in the world, AMC is playing the offense again. And then we have all the numbers here. the Rock. Thank you guys that you're writing in Hebrew. I know I understand, but the guys don't. So if you can, just write in English, so like I'm the only one that understands, but it's okay. Like they can, if someone wants to really know what you're writing, they could just Google Translate. But whatever. And just so you know that for some reason it like blocked the comment, so I had to unblock it. So just if you know how to write in English, better off writing in English. So here are the numbers, right, that we have here. So revenue, right, 444.7, right, in this quarter. And look at this number here, 18.9, right? So this is last year in the second quarter. So I mean, listen, it was it was the quarter when everything was popping up, March to June. I'm surprised that this is as high, right? Because it was when times were really getting wild and people were standing in line at Costco's buying toilet paper. I bought like even in Israel, I bought extra toilet paper. It was running out, and people were really stressing, and they and so we bought like extra toilet paper and had it like a year later and we still didn't use it, so because in the end we had toilet paper. There was the scare, you remember, that the manufacturers in China wouldn't be outsourced out selling to the world, and so then there would be a shortage of toilet paper. So that was a really hard time, and the fact that they had a revenue that wasn't zero, that's interesting. So we had here for the year we already have 593. So you can see how the second quarter 444 and the total is 600. So this means that we already doubled the second quarter than the first quarter. So this is amazing, 100% quarter over quarter. And 2020 there was 960, which is still a big number if you think about it. Probably most of the revenue is from the first quarter and the last quarter, right? And so here in this situation, we're already half a year, we're already halfway there. So and if this continues the rise and we have another almost 500, so next quarter we'll already pass this number in 3 quarters. So this is already a great situation for AMC. Thank you, Seb, for the super chat. Smash the like button, guys. How are the numbers? The numbers look good. What do you think will happen after the call? So I talked about this. It's dipping a little bit here. It's a little bit of a tiny itsy bitty sell-off here, a few percentage. It makes sense. The hedge funds are not going to lie down and just let it pop up so easily, guys. So I think that we have 10 more minutes to the conference call, and I think that it's going to be very important. There's going to be very important to hear what the outlook is, right, and what they are doing to innovate and to bring more revenue in and to get people in the movie theaters even when we have the Delta variant, and get people to drop more money at the movie theaters, right? So we have the concession stand, and maybe you want to, I don't know, sell merch, right, at the movie theater. Now you have all the apes. There's 4 million apes, 3 million, maybe 3.5 million in the US. Let's sell merch, right? I'm sure that a lot of moviegoers would, and people that are going would like merch. I don't know. And so maybe that's a thing, or maybe they do something else. Maybe they, I don't know, right? I don't want to give away my ideas for free, right? But it's going to be interesting to see how he's going to answer that, and how is he going to answer the ape questions, right? Is he going to answer Timothy's question about the dividend? In my humble opinion, I don't think he's going to answer it, just because when he was on Trey's show on the second time, he said he can't, right? Legally, he can't talk about dividends. So I think the answer will be the same, or he's just going to, not bring that up, right? Because he decides which questions he's going to do, and so then he can decide what he wants to answer. And so I think that will be interesting to see. So guys, if you're here and you haven't heard the Ole Ole song yet, it's for the people and for AMC, right? Because before we sung it and AMC went up, and so the likes also went up. So this time we'll try it again, and we'll see if AMC will go up after the Ole Ole song. And while we're doing it, you can of course join in. I love some videos. Send me on Twitter of you singing with me Ole Ole, and just smash the like button. So that would be amazing as well. So Ole 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 Ole. Ole, 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 ole. So guys are saying in the chat here that Matt Kors is down again. It's a real shame that they keep doing it to him. I don't know if it's I get comments here, but not at the same rate. And when you have 15,000, 20,000, 30,000 people on your stream, and there's lots of comments and people are saying all kinds of things, it's a shame that he's down again. So that's really infuriating, and I hope that they didn't close his channel again. That would be a real bummer, and it's something that they need to fix. It doesn't make sense. What is it? The Orev said here that whenever I'm in Beersheba, I can come for a beer. I used to live in Beersheba 5 years, so I haven't been there in a while though. maybe I'll be back soon. Yeah, we got Avi, we have TMI. So yeah. It's a bummer that Matt is down. Yeah. If you saw me, I was on TMI on Friday, TMI's channel, and on Friday, and it was funny at the end. He got cut off, and I was there by myself, so it became my stream, right? So it was a funny situation. The song hasn't worked so far, guys. Probably the smashing of the like button wasn't hard enough. So that's the situation. So let's get back to the numbers. Enough of the chit chat. We have another 7 minutes until Matt is back. Okay, guys. If you jumped on and you were, you prefer Matt's pretty face or without the accent, so you can jump back to Matt's channel. But if you want to stay here, we have dad jokes, right? We have singing. We have, Hebrew sometimes. And if you enjoy those things and you think and you like AMC as well, so you're welcome to stay with us, because I think there was the influx when Matt's stream went down. So let's get back to the numbers here. So basically you can see here that there is a net loss of 344 million. So something that you need to know is that AMC is not profitable, and they haven't been profitable for a few years. This is one of the main reasons why the stock had been going down, right? It was at 30, right? And it started going down back in 2017, I think, was the last time they had a profitable quarter. And so what happened is around that time, people started shorting the stock. And when the pandemic hit, it got even worse. right? And so we got to that area where we had 1.1 was the value, if you remember, which is wild, right? 1.91, to think some people bought at 1.91. And so, but before that, right, in the beginning of the pandemic, AMC was at 7, right? So, and even before that, so the problem started around here, right? You can see, if you can see it here, see they were profitable, 0.31, 0.31. And then here in 2017, suddenly became minus point, right? -2. They had a few profitable quarters here, but most of the quarters were losses, right? So let's get back to the balance sheet. So you can see here again, we have 344 million losses, right? But what happened is this quarter we had a lot more revenue. So what happens is that they thought that there was going to be less revenue and the same amount of expenses, and so that's why we beat the expectations, right? So very interesting. Now you can see here the attendance was 22 million. Last year it was 100,000. So last year they had a big loss, but the loss was mitigated because they had to close the theaters and they didn't have expenses for employees and electricity and water and things like that were off the table this quarter when the movie theaters are back up. So now you come into a situation where you have everything back. You have employees, you have utilities. So last year they only had rent. So now they have that as well. And so these are good numbers. 17 million in the US market and another 4 million for the international. And remember, he said that a great percentage of the international market is still closed. So this number could get up to, let's say, around 8 or even 10 if everything goes according to plan with the international screens. But that has to do with each country specifically and what they're deciding to do. Some countries like China and Australia are locked down again. Some countries are just saying, well, we'll get a booster like what we're seeing here in Israel. So it's going to be very interesting to see going forward what is the situation with AMC, and can this continue this great progress that we have seen here. And so the price is a little bit dipping here towards the conference call. It makes sense. People will take this opportunity as soon as the numbers come out, try to make a little bit profit, and then take off before the conference call, just because the conference call, so one small thing could shake things up. So that's why, and this could be also manipulation by the hedge funds that are trading here after hours. After hours and pre-market, although it is important, it doesn't really tell us, the story. Sometimes you'll see a company come out with earnings and the stock price goes up, and it could be up 20% when trading commences, right, when a pre-market ends, and then suddenly you'll see a big dip because there was no volume and was manipulated by algos during the aftermarket and pre-market. So it's not something that I would get too concerned about. But it's great to see that green after hours when we're up 4 or 5%, and we were already up 10%, which was even more great. So let's see. We have just 1 more minute left for the till it starts. So let me try to find where it is. Here we go. The webcast. Let's see. And while I'm doing this, guys, we'll do ole ole ole. I have to sign up. Let me sign up. 1 second. First name, of course. My given name is actually not Avi. It's Avram. Just a little bit of personal information, but everybody calls me Avi. So, like my wife and my kids, and everybody. Where is it? Where is it? What did I do?
Yes, I do.
Greetings. Welcome to the AMC Entertainment
here.
fourth quarter and year-end 2020 earnings webcast. At this time, all participants are in a listen-only mode. A question-and-answer session will follow the formal presentation.
Okay, guys, I'm going to shut off my microphone so we can listen together, and after we'll talk a little bit. So I think I'm gonna close my mic, so my camera, so you don't have to see my face.
Thank you, Alex. Good afternoon. I'd like to welcome everyone to AMC's fourth quarter and year-end 2020 earnings webcast. With me this afternoon is Adam Aron, our President and Chief Executive Officer, and Sean Goodman, our Chief Financial Officer. Before I turn the call over to Adam, let me remind everyone that some of the comments made by management during this conference call may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned to not place undue reliance on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this call, we may reference measures such as adjusted EBITDA, free cash flow, adjusted free cash flow, and constant currency, among others, which are non-GAAP financial measures. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier today. After our prepared remarks, there will be a Q&A session. This afternoon's call is being recorded, and a webcast replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, everyone, and thank you for joining us today. Let me begin this afternoon's call the same way I've begun all of our 2020 earnings calls, by expressing my wishes that you and your families are all in good health, and I will add to that on this call, and that vaccination comes soon for you as well. You all know that 2020 was a year unlike anything that we've ever seen. COVID-19 has dramatically, and in some cases tragically, affected all of us to an extent we never could have or would have imagined. Throughout it all, AMC never minimized the stresses that this pandemic put on our industry and on our company, which were corporately life-threatening, as you all know. On our quarterly calls, we told you of our resolve and determination, but also of our reality and distress. Our public disclosures were fulsome, robust, and fully transparent. We pulled no punches in describing the magnitude of our challenge, and yet we were clear that at AMC, we were absolutely committed to fighting the good fight and doing all that was humanly possible to save this proud century-old American company that has been a meaningful part of the American cultural landscape since 1920. And finally, today, we can give you an immensely satisfying report. As we sit here today, thanks to developments on so many fronts during the fourth quarter, and especially in January and February, I am now in a position to say that I am optimistic and confident about AMC's ability to weather this COVID-19 storm. Our focus is no longer on survival, but now is turned instead to directing a surge in moviegoing and on the recovery of AMC, objectives that feel to us like they're right around the corner. AMC's accomplishments over the past year have literally been breathtaking since our theater shutdowns almost exactly a year ago. With what essentially was an instantaneous and almost complete collapse of our revenues, there was very little room for error. Simply put, AMC needed to execute flawlessly to make it through 2020, and that is exactly what we did. So why are we so confident, even ebullient today? 4 reasons why. First, we raised a boatload of money. Over and over again, we raised cash. Doomsayers wrote us off several times during the last 10 months, and many strongly doubted our ability to raise the necessary capital to survive absent a court-sanctioned restructuring. But happily, they were wrong. Now, they weren't wrong because they misjudged the risk. AMC walked quite a tightrope in 2020. But thanks to the tireless and skilled efforts of the AMC team, support from our creditors and landlord partners, and enthusiasm for AMC's future in the equity markets, since March of 2020, we've raised a total of $2.2 billion of gross debt and equity capital, including some $870 million of equity. We secured more than $1.6 billion of creditor and landlord concessions and generated more than $80 million in asset sales to weather the storm. Second, we have proven that we can operate our theaters safely and cleanly, and our theaters are reopening now once again. As for our safety and cleanliness protocols, they were developed in partnership with the Clorox Company and current and former faculty of Harvard University's prestigious School of Public Health, and those protocols have worked brilliantly. Some 17 million moviegoers have watched movies in our theaters since reopening, and we are not aware of even a single COVID-19 case having been transmitted at our theaters amongst our guests. To achieve this impressive result, of course, we did the obvious social distancing, mask wearing, seat blocking, ubiquitous cleaning wipes and hand sanitizer gel, along with a wide array of other sanitization efforts. But at AMC, we also were way out in front with high-tech solutions like electrostatic sprayers, HEPA vacuums, and perhaps most important of all, upgrading our HVAC systems to include MERV 13 quality air filtration. As for theater reopenings, we finished 2020 with only 67% of our U.S. and 30% of our international theaters open for business. This is down from the intra-fourth quarter highs, where 90% of our circuit was open, both in the United States and internationally. But as we now turn the page on 2020, the year 2021 is already proving to be a much brighter story. As of March 5th, with the reopening of our very important New York City and San Francisco theaters, and a brand new theater christening in Denver as well, we are back to our fourth quarter highs of approximately 90% of the AMC domestic circuit being open. That is a much higher percentage of our theaters that are open than most of our major competitors and the U.S. theater community as a whole. We think that's a competitive advantage for us as we move to bring moviegoers back to our theaters as new movie titles are released. Now, as for New York, the New York City reopening is such a harbinger of good times ahead for AMC. Pent-up demand is a mighty, mighty thing. In just its first open weekend, the New York DMA was AMC's single biggest market in attendance and in revenues across the entire United States. It helped drive our weekend attendance a few days ago to be 250% of what it was in the last 3 weekends of January or in the first 3 weekends of February. New York's first open weekend gave us at AMC our best weekend results dating all the way back to March of 2020. And importantly, based on comments made yesterday and again today by Governor Newsom of California, we should be opening our theaters across Southern California, including Los Angeles County, sometime very soon, possibly, but not yet definitely, as soon as 9 days from now, on Friday, March 19. Incidentally, we're opening our theaters in Alameda County, California, what you think of as Oakland and the East Bay, 2 days from now, on Friday, March 12th. To put the magnitude of an LA reopening in perspective, as a movie market, the LA DMA is about double the size of the New York City market. And so important for us, given AMC's market share leading positions in these cities and in these states, almost 1/3 of all AMC movie viewing dollars in the United States takes place in just the 4 states of California and the tri-state region of New York, New Jersey, and Connecticut. And finally, after a year of closure, New York City and Los Angeles are coming back for AMC. Looking internationally, our 7 theaters in the Middle East all reopened this past weekend also. And it's our current expectation that almost all of our European theaters will in fact reopen well in time for the big spate of movie blockbusters that are expected to start getting released in May. Speaking of movie blockbusters, the third reason for our good humor and secure state of mind is that after a long drought, one major new movie title after another is set for near-term release. Warner Brothers has Godzilla vs. Kong later this month. We hear that Disney is very firmly committed to an early May release of Black Widow. Sony just moved Peter Rabbit forward in May. Paramount just moved A Quiet Place 2 from September to Memorial Day weekend. Universal is holding F9, the latest Fast and Furious movie, with a June 2021 release. And speaking as a personal favorite, my favorite movie this summer, no doubt, will be the long-awaited Top Gun Maverick starring Tom Cruise, and which opens 4th of July weekend. And after that, it'll be one hit movie after another all year long. The CEOs of 2 major studios each told me that a good metaphor for AMC's circumstance is that we are LaGuardia Airport, closed by a thunderstorm with tons of planes circling overhead, all waiting to land and all needing to land. By our count, around 40 major movie titles that have already been completed were delayed from a 2020 release and will be released theatrically, hitting our big screens starting in May and beyond. Another metaphor that I've repeatedly used is that AMC is in the new car business, and that since March of 2020, we've had very few new cars shipped to our showrooms. Finally, now, those new cars are on their way to us, and seldom we will, in massive quantities, I might add. And the fourth reason for our optimism is the brisk pace of vaccination. This very week will mark the 100 millionth vaccine injection in arm in the United States. And we are vaccinating now in this country at a rate of between 60 and 90 million injections monthly. For all the talk of the steps we at AMC have taken to bolster our position, the real salvation of our company will be because of vaccination. I know for a fact who the single most important person is in the entire movie business throughout 2020 and 2021. And no studio nor any movie theater circuit is the employer. His name of the most important person in our business is Albert Bourla.
Guys, something happened. So I don't know what happened. Why that's what they gave me. I'll fix this 1 second. Oh my God, what a technical difficulty time, right, guys? This is fadicha, like we say in Hebrew. This is what I pushed. I don't understand why. This is what we got, guys. Here we go. Again.
And very successful step along our pathway to recovery. Overall, our global attendance in Q2 was more than 3 times that of Q1. While this is approximately 77% below 2019's attendance levels, it is only approximately 45% below our 2019 attendance per showing. This is an illustration of how we're actively managing our show times and associated costs to optimize the efficiency of our operations. We have a way to go before the business fully normalizes, but clearly we are on the right path and making significant progress. In general, comparison of our results to 2020 and 2019 are not particularly meaningful, given that we are still in a ramp-up phase. However, there are certain metrics that are really very encouraging and worth mentioning. Compared to the second quarter of 2019, the domestic average ticket price was up more than 15%, and food and beverage revenue per patron was up nearly 42%, to a very impressive $7.91, and this compares to $5.58 during the second quarter of 2019. Similarly, the international average ticket price was up 6%, and food and beverage revenue per patron was up nearly 33% compared to the second quarter of 2019. This food and beverage increase is primarily driven by a significantly higher percentage of guests choosing to purchase our food and beverage concessions. We are continuing to see strength in both the average ticket price and food and beverage per patron as we move through the third quarter. Clearly, our guests are celebrating the event of going out to see a movie and enjoying the full immersive theatrical experience, the sights, the sounds, and innovative AMC concessions. Let's talk a bit about our balance sheet. As Adam noted, we ended the quarter with $2.023 billion of total liquidity. And this is comprised of $1.811 billion of unrestricted cash and $212 million available under our revolving credit facilities. This record liquidity level was made possible by our equity issuances during the quarter, plus the completion of the sale of our remaining equity interest in theaters in Lithuania. On average during the second quarter, our cash burn was $85 million per month. This is a significant improvement from Q1, when the average cash burn per month was $120 million. And this improvement in cash burn is a result of higher gross box office grosses, together with our very strong operating performance. And it's particularly noteworthy and an impressive improvement when one considers that our cash interest spend and deferred rent repayments were significantly higher in Q2 than they were in Q1. If we look at cash burn before the payback of deferred rent and debt servicing costs, it was approximately $40 million per month in Q2 versus a burn of $115 million per month in Q1, a very significant improvement. Note that our cash burn numbers are stated after normalizing for the impact of capital raised during the quarter and therefore exclude the proceeds from completion of the sale of our theaters in Lithuania and the equity capital that we raised during the quarter. Regarding capital allocation, we're pursuing a balanced approach to capital allocation, and our priorities are as follows. 1, ensuring that we have sufficient liquidity to withstand any bumps along the road and the inevitable volatility as our industry recovers from the impact of the COVID pandemic. 2, strengthening our balance sheet by reducing our debt and associated interest costs. 3, investing in our business to enhance the guest experience. And 4, opportunistically pursuing value-enhancing partnerships or acquisition opportunities. With our current solid liquidity position and the recovery that we are seeing in the business, we believe that it is appropriate to carefully deploy our cash in ways that are most beneficial for the long-term future of the business. Well, of course, we will continue to be ultra-focused on our operating efficiency. This will be rather than focusing on short-term monthly cash burn. And what I mean in this regard is we expect going forward that we will choose to pay cash interest as opposed to payment in kind or PIK interest. This will avoid any increases in our debt position. We also anticipate taking thoughtful actions to reduce our debt, including the deferred rent balance, all of this with a view to strengthen our company for the future. In addition, we will continue to actively manage our theater portfolio, closing underperforming locations. We've quietly closed more than 74 marginal or money-losing locations over the last 18 months, and opportunistically pursuing attractive, high-potential locations, which Adam will discuss when he comes back on. Turning to our landlords, at the end of the second quarter, we had deferred rent obligations of $420 million, representing a decline in obligations of approximately $55 million compared to Q1 of 2021. For the second quarter, actual cash rent paid was approximately $55 million more than what is shown on the face of the income statement as we repaid deferred rent. While future cash rent payments will continue to be dependent on ongoing discussions with landlords, we anticipate cash rent paid in the second half of 2021 will be significantly higher than in the first half as we continue to work on reducing the deferred rent balance and we take advantage of opportunities that may arise to, for example, prepay rent in exchange for favorable lease terms. For now, we continue to focus the substantial majority of our capital expenditures on maintenance spend. However, a small amount of growth CapEx could arise from potential opportunistic high-return investments later on in the year. CapEx for the second quarter was $10.5 million. This is net of landlord contributions. Net CapEx for the whole of 2021 is expected to be in the range of $100 to $120 million. Reflecting on our results and the financial position at the end of Q2, it is quite remarkable just how far we have come in a relatively short period of time. We believe that we are uniquely well positioned for a strong and profitable recovery now that all our theaters are open. We have a backlog of exciting movie titles to be released, and we have record levels of liquidity. And with that, I'll pass the call back over to Adam.
Thank you, Sean. I've been saying publicly ever since we raised that life-prolonging additional equity in May and June that it was high time for AMC to start playing on offense again. And earlier on this call, I promised you some news. So here goes. Quickly, on 10 specific items. 1, you already know that with ArcLight and Pacific Theater's decision to permanently shut down, we announced that we've executed 2 leases with Rick Caruso's world-class real estate organization to add to the AMC fleet of theaters 2 of Los Angeles' highest-grossing cinemas. The Grove and Americana at Brand were the 2nd and 5th highest-grossing theaters in Greater Los Angeles as recently as calendar year 2018. They should open later this month as AMC theaters. However, I can confirm today that the number is not 2 new theaters for AMC. It might be 10. We actually now have 6 new theater pickups under lease or signed letter of intent, not 2. 3 of those are in Los Angeles, 2 are in Chicago, 1 is in Atlanta. And we also are currently in advanced negotiations to add 4 more, bringing the possible pickups to 10. 8 of the 10 would come from former ArcLight Pacific locations. Item 2. Speaking of new theaters, in 2021, we will open about a dozen new build theaters in the U.S., Europe, and the Middle East that were all well underway before COVID struck. I'm happy to report that we do know something about designing beautiful and productive theaters. In the United States, for example, we opened 3 new theaters in 2021. The 2 in Los Angeles, AMC Porter Ranch and AMC Dine-In Montclair, are already each among the top 25 highest-grossing movie theaters in the entire United States. That puts each of these 2 theaters in the top 1/2 of the 99th percentile of highest-grossing U.S. cinemas. And that was achieved in just their first few months of operation. Really astounding. Our new AMC Dine-In Theater in Sunnyvale, California, also is doing amazingly well. It's in the 94th percentile of highest-grossing U.S. theaters. Item 3. Many of our new individual investors have showered us with great ideas about how we can strengthen and brighten the future of AMC. Among their ideas for AMC are that we show concert movies, professional sporting events, esports, and gaming events. Wasting no time, we've immediately started to implement on these very good ideas. Our first 2 UFC matchups, which were in July, drew significant attendance to our theaters. Our first 2 concert movies, with Chance the Rapper and Halsey, will show at AMC theaters across the country later this month in August. We're quite optimistic that this alternative programming can be built into a real revenue opportunity for AMC in future years, and we're chasing it hard. We also hope to engage in meaningful dialogue with professional sports leagues and collegiate sports conferences to see if we can obtain the rights to show more sporting events at our theaters. As for gaming opportunity, indeed, the president of Epic Games is a member of the AMC Board of Directors. And I cannot even count the number of times already that our shareholders have asked us to reach out and partner with Gamestop. We're on the case. More to come. Item 4. Many of our new shareholders also are quite enthusiastic about cryptocurrency. Some of you may know that my best friend of almost 25 years duration in Europe, the billionaire former chairman and owner of Silversea Cruises, formed a SPAC earlier this year called Centricus, and he asked me to join its board of directors. SPAC, for those of you who don't know it, stands for a Special Purpose Acquisition Company. That's a fancy name for a pool of investment capital in search of a company to buy. Ironically, Centricus is under contract to buy a fascinating company called Arquit, A-R-Q-U-I-T, who just happens to be on the very cutting edge of quantum encryption and blockchain technologies. It was initially funded by the British government. Its clients include British Telecom, the European Space Agency, and Verizon, among others. My role as a board member is merely to ensure that all laws and SPAC norms are being complied with when that acquisition of ARCID is completed, which will be soon, I would expect. I will then drop off the board of directors. However, to get to this point, I've had to learn more in the past 6 months about blockchain and cryptocurrency than I learned about it in the entire decade before that. This increased knowledge has given me the confidence to tell you all today that AMC is hereby formally announcing on this call that by year end, we will have the information technology systems in place to accept Bitcoin as payment for movie tickets and concessions if purchased online at all of our U.S. theaters. We also are in the preliminary stage of now exploring how else AMC can participate in this new burgeoning cryptocurrency universe, and we're quite intrigued by potentially lucrative business opportunity for AMC if we intelligently pursue further serious involvement with cryptocurrency. More detail will be shared publicly with you, but only if, as, and when our plans are more firm. Item 5. Since we had to do the IT programming to accept Bitcoin anyway, we are simultaneously writing the code right now to accept Apple Pay and Google Pay for online purchases at our U.S. theaters also. These new payment methodologies for us should also be implemented by year end. Item 6. Again, speaking of our new shareholders, in June, we introduced a new program called Amc Investor Connect that got a lot of press attention. It's part of AMC Stubs and offers our shareholders who participate full Stubs benefits. We are thrilled that almost 300,000 of our shareholders have already joined. Our goals with the program are simple. We'd like to improve the communications that we have with the people who own AMC. And we also want to convince many of the millions of people who are now our shareholders into becoming avid customers of our theaters as well. Hence, we already have made multiple free and discounted offers to participants in AMC Investor Connect, and we're setting up a program of special advanced screenings for our AMC Investor Connect members. To that end, a very special thank you to Sony Pictures for enabling our first such advanced screening in July, ahead of the scheduled theatrical release of Escape Room Tournament of Champions. Item 7. Also, to heighten the information exchange with our new shareholders, as well as with the public at large, in April, I started actively tweeting again, which I had not done since my days when running the Philadelphia 76ers back in 2013, when Twitter was my social media platform of choice to interact with sports fans. My Twitter followers have more than tupled since April and now exceed 150,000. But what kind of blows my mind is that according to Twitter analytics, my tweets, which I write personally, so far have been read more than 72 million times. In addition, I'm actively following almost 2,000 people who appear to be interested in AMC to get a better sense of what they're saying and thinking. I also make it a point to check and read my inbound Twitter feeds personally. There are hundreds and hundreds of replies to any tweet that I publish, which I find gives me a more sophisticated and better understanding of what's on the minds of AMC's new owners. Item 8. With labor costs going up in some places around the country, our costs are rising in the United States. We've also noticed that there's appeared to be little price resistance to the increased prices currently being charged at our U.S. theaters. So just last week, we imposed an approximate 5% admissions ticket price increase at many of our U.S. theaters. On average, that's about 50 cents or so in an increased admissions ticket price. We think consumers will find that palatable, but hopefully that will meaningfully strengthen the AMC bottom line. Item 9. There's a lot of talk currently about exclusive theatrical windows, or the lack thereof. You all know that AMC was way ahead of this issue, reaching a landmark and historic agreement with Universal in July of 2020 on their concept of premium video on demand. We were pleased then, and we're still very pleased now, with the outcome of the Universal AMC agreement, and in our mutually working through that initially contentious issue, AMC and Universal are now very close. In fact, I think we have the best working relationship that we've had together in many years. In this same vein, I'm also pleased to announce today that AMC just reached formal agreement with our friends at Warner Brothers to show all of their movies in calendar year 22, importantly respecting an exclusive theatrical window of 45 days prior to home release for all Warner Brothers films. It's no secret that AMC was not at all happy when Warner decided in December to take movies to the home on HBO Max simultaneously with theatrical release. Therefore, it's especially gratifying that Warner is yet again embracing an exclusive theatrical window. And for us at AMC, it's especially pleasing to be working so harmoniously with Warner Brothers once again. We actually are in dialogue, active dialogue, with every major studio on this very important topic. We are hearing considerable support in Hollywood that an exclusive theatrical window is an important way to build big and successful movie franchises. Clearly, though, this whole subject is quite topical. It's very much a work in progress. We will keep you posted as things turn out. And finally, 10. I'd like to thank the board of directors of AMC for electing me in July to serve as chairman of the board, as well as CEO of AMC Entertainment. You know all that. And you've also heard that former U.S. Ambassador to the United Kingdom, Phil Later, was elected to serve as the board's lead director. To be no surprise to any of you that we have a highly able, experienced, and dedicated board. I feel fortunate to serve with them all. But the news on this point is that at our first meeting of the board in my new role, I discussed with the board that I think it is extremely important that company insiders maintain a significant financial ownership stake in AMC through owned and or granted shares so that insiders have financial interests that are directly aligned with those of our shareholders. Our board members already have a policy in place that they must hold any granted shares for at least one full year. But there was no such plan currently in place for the company's 19 most senior executives. Therefore, I will be recommending to the board a new policy. Without going through all the nuances, and it's kind of complex, but to simplify it and break it down, I will propose that I, as CEO, be required to hold a number of owned or granted shares at least equal to 8 years of my salary. In my case, 8 years of my salary would mean that I would be required to have at least a $12 million ownership stake in AMC of owned or granted AMC shares. Sean, our Chief Financial Officer, would be required to hold 6 years of his salary. Our Executive Vice Presidents will be asked to hold 4 years of their salaries in owned or granted shares, and our senior vice presidents will be asked to hold 2 years of their salaries in owned or granted shares. The board will consider this proposal as new policy at its next regularly scheduled meeting. At the same time as I am emphasizing share ownership, I'd like to remind you that I have not sold one share of AMC stock in the 5 full years I've been running this company, even though it represents more than 3/5 of my annual, when I say it, when stock represents more than 3/5 of my total annual compensation. Other than gifting a small percentage of my AMC ownership stake to my 2 adult children, earlier this year, I also did not sell any AMC shares in March when I could have. I did not sell any AMC shares in June when I could have in 2021. I similarly will commit that I do not intend to sell any AMC shares in September of 2021 when I'm legally permitted to do so. But as much as this pains me to admit, in September, I'll be celebrating my 67th birthday. I'm going to be a young, vibrant 67, but hey, it's 67 nonetheless. 2 months ago, more than 85% of my net worth was in AMC stock, and proper estate planning for a 67-year-old suggests I should diversify my assets a bit. But I don't want any of you ever to think that I have anything but full confidence in AMC's future. So I will do so under the auspices of the parameters of what is called a 10b5-1 plan, where I pass off all the share trading control of the shares that I own or am granted to an independent third-party bank based on parameters of the plan that I only partially set. The plan would not go into effect until towards year-end at the earliest, and only a small percentage of my owned or granted shares could get sold in any 1 month. And that would then be repeated over a period of at least several months. This way, I really have passed on the decision-making to someone else on this important topic. Additionally, whatever is sold or not sold by an independent third party, I still will have millions of AMC shares that either are owned by me personally or have been previously granted to me personally. My economic incentives are very much aligned with yours to increase shareholder value for all the owners of AMC. What's more, I so fully believe in transparency that I'm letting you all know this well in advance, even though current U.S. law does not require me to make this or even any public disclosure now, at this time, or at any time soon, prior to any shares actually being sold. Well, there you go. That's the quarter. That's 10 items of news. Our second quarter was a very encouraging one for AMC. We believe we're on a road to recovery, and we're ever so grateful to our friends and allies who share our passion that AMC's best days should be those that are coming. You can take comfort that our deeper financial reserves allow us to stay the course, to innovate again, and to capitalize on the opportunities that we see around us. We fundamentally believe that ours is a future that is bright because there is nothing as magical as seeing dazzling images on a huge silver screen. We're now going to turn this call to the questions that were submitted and upvoted with the greatest shareholder interest on the Say Technology platform, and then we'll take some questions from analysts if you all can spare us the time. I should point out that this is an experiment, this Say Technologies platform, for us. It works really interestingly, but it only works with some brokerage firms, not all. So many of our U.S. shareholders, and especially many of our international shareholders, may not have had a chance to ask their questions on this call. Still, we've had quite a bountiful array of questions posed to us to answer. Sean, what's the first question?
Thanks, Adam. So the first question that we have is from Timothy, and the question is, do you have any plans to offer a dividend again?
Thank you, Timothy. We appreciate the question. If you look at our past since going public in 2013, AMC paid a sizable quarterly dividend every quarter until we got close to the pandemic. And realizing that our liquidity would be stretched, we ceased offering a dividend. There are some commitments that we've made in some of our debt instruments that we cannot pay a dividend until, at the earliest, about a year from now. Having said that, we do know that dividends are very much on the mind of our shareholders, so we'll take that interest quite seriously when we have the ability to make dividends once again. We'll balance those shareholder desires against the other competing uses of our cash. What opportunities are available in M&A? How much do we need for liquidity? What can we do in the way to deleverage the company? All the priorities that Sean talked about previously.
Great. Thanks, Adam. And the next question is from David. The question is, will AMC consider partnering with Gamestop to offer more theater experiences via local and national gaming competitions?
As I said in my remarks just a few minutes ago, I don't even think I can count the number of times people have asked me if we could partner with GameStop. We're certainly willing to do so. It seems to me it's one of these interesting ideas that's flowed in from our individual investors, and we're happy to reach out to GameStop and see if they have any interest.
The next question is from Ryan. The question is, would AMC ever consider reestablishing drive-in theaters? With the current state of the world, it would bring a lot of revenue with little worry for people trying to social distance.
Ryan, that's a great question. And the reason I say it's a great question is I asked that same question last July, and we went through an exhaustive analysis of drive-in theaters. And honestly, we came to the conclusion that they're a bad economic idea. It sounds appealing, yes, you stay in your car, but there are two problems. Go into a parking lot and look at how much asphalt is needed to put a lot of cars in a lot. The viewing experience at a drive-in theater is not necessarily great because many people are quite far from the screen. Additionally, drive-in theaters are very seasonal. They're not popular in the winter in colder locations in the United States. And in the summer in much of the United States, it doesn't get dark before 8 or 9 o'clock p.m., which means that you really can only use the drive-in screen for one showtime a night. The economics aren't there. It's unlikely that we would go forward. It sounds like it's a great idea, but it isn't actually.
Thanks, Adam. And the next question is from Terrell. The question is, how is AMC preparing for the possible large-scale COVID surge that could potentially shut theaters down again?
You know, when I think back over the last year, I think the thing that I'm most proud of is that we prevented a catastrophe at AMC, which so many were predicting. But right up there along with it, I am so proud of the safe and clean protocols that we developed in partnership with the Clorox Company and current and former faculty of Harvard University's prestigious School of Public Health. To our knowledge, there's not been a single transmission of COVID to an AMC guest over the last year. And so the first thing that we're doing is staying very strongly committed to our safe and clean protocols to continue to operate our theaters safely and cleanly as we go forward. In addition to that, I think we also can hope that there may not be a large-scale COVID surge that would force the kind of lockdown or shutdown that we saw in the United States and countries abroad a year back. Now, most scientific experts will tell you that the virus will increase in the winter compared to the summer. But the big change between this winter and last winter is vaccination. And fortunately, the number of vaccinations, especially among the most vulnerable population, has been so extensive that we're optimistic that we won't see the kind of lockdown of society this winter that we saw last. We also hope that vaccination continues. There is no more important thing that any of you can do to protect yourselves, your families, your friends, and the country as a whole. There's nothing more important than you can do than to get vaccinated. And I know that many of our shelters are younger, who think that they're invincible. It is true that older people are more susceptible to COVID than younger, but no one is totally invincible against this virus. The solution for AMC is vaccination. I would remind each of you the solution for each of you is vaccination too. Next question.
Arun asks, are there ways you are considering to reduce the company debt without issuing new shares?
Yes. Some of our debt is trading at a discount. We might be able to buy it back at a discount. Some of our landlords, where we have deferred rent obligations that stretch out for years and years, have indicated to us that they might be willing to take a reduction in what we owe them if we're willing to pay them in cash now. Unfortunately, we do have this $2 billion of quarter-ending liquidity. Once we have satisfied ourselves that we have the liquidity to get through COVID, no matter what COVID throws at us, we then will be turning to debt reduction and see if there's opportunity there.
Next question is from Mike. Mike asks, how does AMC plan to combat day-and-date releases of movies on streaming platforms and theaters?
Well, this is such an important topic, and I addressed it earlier in my remarks, that we're especially pleased that Warner Brothers has decided to move away from day-and-date releases and commit to an exclusive theatrical window as well. We're having private conversations with every major studio in Hollywood on this very important topic, and we're seeing a lot of consensus emerge that an exclusive theatrical window is a good way to build major motion picture franchises. It's a fluid situation. A lot of studios that have experimented with day and date say that they're doing it only in sort of pandemic times. We'll all see how together this plays out. But we know that studios are going to do what's in their financial interest. They're not going to just help out AMC charitably. So we are also making sure that our marketing programs are as vibrant and powerful and as potent as they can possibly be. AMC has been a marketing leader in this industry for the past 5 years, and we've got a few tricks up our sleeve coming. We intend to continue to be a bold pioneer and lead the industry in marketing, hopefully driving audiences to our theaters, hopefully selling more tickets, which then in turn hopefully convinces our studio partners that the smartest thing for them to do, give us their movies first and let us help them build their brands.
Next question. Would you consider selling AMC merchandise at theaters and on online platforms? I think it would be profitable.
We would consider it. This is, again, one of these ideas I've received a lot of commentary about in the last few weeks. It's intriguing. It's complicated to send merchandise to 600 retail locations. We have to make sure that it sells, or we can get stuck with inventory that makes it a less profitable business than you might think. But we're going to take a hard look at it.
Next question from Amy. Could live theatre and concert events be streamed to theatres? Based on the streaming success of Hamilton, I expect this would be a real seat-filling success.
Yes, and yes, Amy. But not on Hamilton, because that's already come and gone. But, we are experimenting right now with these two concert movies by Chance the Rapper and Halsey, each of whom has a huge following. And we're already in discussions with major musical entities and talent about whether this could become a permanent line of business for AMC to have this kind of intriguing alternative programming at our theaters. And it's not such a new concept. There's a company called Fathom Events that we own a third of, and they've been showcasing some kinds of alternative content at movie theaters for decades. The Metropolitan Opera being the biggest example. But I think there's a real opportunity here, and we're going to chase it. The same with sports. The same with gaming. There's really a possibility here to find a new source of revenue that AMC has not tapped before.
Petra asks, can AMC partner up with Gamestop for gaming competitions on the big screen?
I think that question was asked and answered. Takes two to tango. We're willing. We have not reached out to GameStop yet, but we intend to do so.
Mark asks, do you plan on reinstating dividends? They tend to mean a lot to a certain type of investors. They could potentially help draw non-AMC investors and larger holders.
We've touched on that too, Mark, and the answer is we know it's important. Sean's a shareholder too. I'm a shareholder too. We'd like to get those dividend checks if we could, but we do have to adhere to the commitments in our debt instruments, and we do have to use our cash wisely. That's a decision for next year. It's not a decision for today.
Aaron asks, I promise not a sarcastic question, but can you guys make the AMC mascot officially a gorilla?
Well, AMC has been around for 100 years. We don't actually have a mascot. It's an interesting question. I don't know. I know why you ask it. I think we're probably going to go without a mascot. But I will tell you this, there is a tremendous amount of branding work going on at AMC right now. I said a few minutes ago that we intend to be the best, strongest marketer around. Watch what we're doing with our marketing programs over the coming weeks and months and years. I think you'll be pleased when you see AMC leading the way yet again.
Next question from Buddy. Has AMC considered partnering with a movie studio in order to produce their own films?
Yes, we have, and recently. And the notion of making exclusive content is an interesting one. Some of you may not know this, but about 5 years ago, we were in a joint venture. 6 years ago, we were in a joint venture with another theater operator to co-fund something called Open Road Films. Open Road Films made a movie called Spotlight, which won the Oscar as the best movie of the year a few years ago. So we have some experience with this. The making of movies is a risky business. Movies aren't cheap to make, and they do take capital. I've made no secret of the fact that I personally thought it'd be very wise for AMC to have sold more shares, to raise more equity, to build up our war chest so that we could entertain some of these more capital-intensive ideas. It was very clear to me in following social media as I do that our shareholder base was quite split on that issue. A lot of people thought it was a great idea. A lot of people didn't want to touch it. And I didn't want to go forward with an idea that important where our shareholder base was split and not unified. So we tabled that motion and did not have a shareholder vote on it. But some of these more capital-intensive ideas will require that the company have more capital. So we're watching it, but again, the priorities right now, Sean mentioned before, have liquidity, get through COVID, deleverage, improve the quality of what we offer, look for opportunistic possibilities. Making content is one of the possibilities that's on our list, but I don't know that we're going to rush into it.
And next question from Jonathan. Will AMC keep holding viewing parties for mainstream sporting events?
I certainly hope so. We've had very good luck with UFC, and there's every indication that they'd like to see us continue. We've talked before to some of the major professional sporting leagues, and they have not yet been willing to grant rights to movie theater operators to show movies in theaters, to show sporting events in theaters. I do think the holy grail on this one would be if we could secure one of the four major leagues, secure rights from one or more of the four major sporting leagues to show live professional sporting events at our theaters. Also, there's some collegiate football that draws 100,000 people into football stadiums all over the country. College football would be something else where I think would be a really powerful draw at AMC. 2 years ago, we experimented showing some NFL games at our theaters, and just for one year. And I can tell you categorically, seeing an NFL game broadcast on a 40-foot high screen is just amazing, unbelievable. The quality is so good of the image. I know that if we can secure the rights affordably, I think it would be a big hit.
Next question is, have you considered expanding AMC to a family entertainment center experience? You could include bowling, an arcade, laser tag, parties, and family dining.
So, this is actually an interesting question, too. And on some of this stuff, we've already experimented a little bit. Obviously, we have family dining at our dine-in theaters, or we have 70 of them or something around the United States. A couple of years back, we greatly expanded through what we call AMC Feature Fare, the hot menu items that are normally served at our concession stands at our non-dine-in theaters, trying to give families better dining choices. We put in freestyle Coca-Cola machines with their 150-ish flavors at all of our theaters in the United States, including all of the Carmike theaters that we bought in the United States. We have a massive investment in Coke Freestyle. Similarly, we've experimented with virtual reality through an entity in which we invested called Dreamscape. We have a Dreamscape virtual reality auditorium experience at one of our theaters in Dallas, one of our theaters in Columbus, Ohio. We're opening soon at one of our theaters in northern New Jersey. It would be pretty inexpensive, actually, to decommission an auditorium if we have surplus capacity and put in a laser tag parlor. It's kind of fun. But if you're talking about the full-blown entertainment center as described in this question, don't underestimate how much capital that an idea like that would need, especially if you want to do it not just in one theater somewhere, but you want to do it at 50 theaters or 100 theaters or 200 theaters. And again, it's ideas like this one why I thought that AMC should raise more capital. Our shareholder base wasn't ready for that yet. So honestly, to do something as you envision, that's going to have to come down the road when we have a larger capital base. At this point, Sean, I'm looking at my list. I think we've answered a lot of questions.
Yep.
And I'm mindful of the time. I'd like to thank our shareholders for sending these in, for voting on them to see which ones we should answer or not first. This is an experiment for us. If you like this idea, we'll do it again on future calls. But let us know. Having said that, operator, if we could see if any of our analysts have a question. We're already over time. It's after 6 o'clock in the East, so we might only have time for a single question.
Very good. So that question comes from Chad Bannon with Macquarie. Please go ahead.
Hi, Adam, Sean, thanks for taking my question. Thanks for all the commentary up to this point. Wanted to ask about some of the metrics you were talking about with respect to industry admission revenue. Adam, you talked about, first quarter 13% of 2 years ago, and now we're up to 45% of 2 years ago. So maybe just kind of a broad question on if you have an updated view on where this can get to, whether it's 2022 or 2023, what's changed in your crystal ball? Is it 80%, 90%? Can we get back to peak levels as you've put all these things in your blender? Thanks.
Thank you. That's the $64,000 question. And nobody knows the answer for sure, and we're all going to learn it together. We've already put out a number for 2021 that we hope the industry box office can get back to $5.2 billion in 2021, which is actually a fairly sizable recovery in the second half because the industry box office was like $1 billion in the early part of the year. Very, very, very low. If you look at the industry box office, this for those of you who don't know the term, the domestic industry box office is the movie theater ticket grosses in the United States and Canada. It's kind of the basic metric of measuring the size of the industry. Well, I went and looked. Pre-COVID, meaning starting in 2019, not 2020. The 5 years, 2019 going back, all 5 of them, the box office was greater than $11 billion. The 5 years before that, it was $10 billion. I think it was, or maybe it was 6 years was $10 billion or more. And I think it was 6 of the 7 years before that, it was greater than $9 billion. So literally, for the past 17 years, the box office has been, first it was steady at between 9 and 10 billion, then it was steady at between 10 and 11 billion, then it was steady at between 11 and 12 billion. And nobody knows where it's going to be in 2023. I've seen estimates all over the map. I've seen people who think it's going to be $8 billion. I've seen people who think it's going to be $10.5 billion. Nobody's crystal ball is good enough to know. But obviously it's a very important question because we will be more profitable the higher the box office is. So we know that with the cash that we've raised, we could survive at an $8 billion box office for a year or two, maybe. But we'd sure be much more healthily profitable if the industry box office rises back up to 9 billion, 10 billion, even 11 billion or more in 2023 and 2024. 2022 is probably still going to be a transitional year between the very low $5-ish billion numbers that we're thinking will occur in 2021 and where it's eventually going to settle in 2023 or 2024.
Okay, great. And then a quick follow-up, and then I'll pass it off. With respect to the food and beverage strength that you saw in this quarter, and I think even in the first quarter from a per cap standpoint, can you talk about where that's coming from? Is that the mobile ordering initiative? Is that a mix of products? And then have you taken prices up, given some of the commentary that you made with respect to ticket pricing? Have you done the same thing for food and beverage yet? Thanks.
Thank you. Let me first tell you what we think the reason is, and then we'll tell you how we're getting there. It feels to us like people who have been away from theaters for a year, when they're coming back to theaters after it's been a long wait, and they're so happy and eager to be back in a movie theater, that they want the whole experience. They want the whole enchilada. They are splurging. And so there are 4 drivers that are causing our food and beverage revenues to be up so much. And remember, when I say up so much, this was a food and beverage spending at in the movie theater industry is quite a mature thing. And AMC was producing more food and beverage revenue than any other major mass operator. But we would have considered a good quarter if our food and beverage spending per patron was up 2% or 3% or 5%. It's up 44% over the pre-COVID levels. And it's coming basically from 4 different things. And it's kind of an equal contributor as to what's driving it. One, mobile ordering is certainly something that people like. We only had mobile ordering in place at about 50 of our U.S. theaters, for example, 2 years ago. And during the shutdown of theaters in COVID, we had time on our hands, so we developed this technology to be able to roll out mobile ordering across the whole of our system. It's now in place at all of our AMC and all of our AMC Dine-In branded theaters. We also thought it was very helpful for the AMC Safe and Clean protocols, because if people were ordering their F&B in advance, there'd be less contact back and forth on payment. So mobile ordering is popular. That's one of the reasons. Next, we did raise prices. That's one of the reasons. Next, when people are going to theaters, they're buying more items. And we see the statistics every single day, and it's true all across the country. They're buying more stuff. If before they bought a soda, now they buy a soda and a popcorn. If before they bought a soda and a popcorn, now they buy a soda and a popcorn and a candy, or the soda and a popcorn and a nachos. Or they're opting for some of our more intriguing menu items that we put in place through feature fare, my favorite being the flatbread pizzas. And the fourth factor, which is really encouraging for us, is that more people are actually going to the concession stand and buying from us at the concession stand. There are many people, a lot of people, who go to a movie theater, and like when I say a lot of people, I mean like hundreds of millions of people a year, who go to movie theaters, not just at AMC, but go to movie theaters and don't buy anything at the concession stand. They buy no food and beverage. All they buy is a movie ticket, and that's the experience they get. What we've seen as people are returning to cinemas is more and more people are going to the concession stand. They're buying food and beverage product because they want the whole experience. It's already 12 after the hour. We've run long. I would like to thank you all for joining us on this call and webcast today. I have something very simple to say. Ladies and gentlemen, see you at the movies. See you at an AMC theater sometime soon.
And that does conclude our call for today. And we thank everyone for participating, and you may now disconnect.
So guys, what do you guys think about what we just heard and what's going on here? And so I'll just stop that, and I'll turn back my one second. I'll turn me back on 1 second here. So here I am. So what do you guys think here about what we heard from Adam, and the fact that he just talked about, first, let's talk a little bit about the dividends and what he said about Timothy's question. I told you guys in videos before that I predicted that he would. I thought actually he wouldn't answer the question, so he answered the question. That's great. But he basically said what he said before on Trey's stream, is that he wouldn't have the ability to give us a dividend at least a year, because they have some contractual agreements that they have to they have to give back a specific amount of money because they're in debt, if you remember. So they can't give a dividend until they close at least a certain percentage of their debt. So that's what he said about Timothy's question. Then he talked about the new theaters. They're going to be acquiring potentially around 10. I think he said they already got around 7. And they're going to get up to 10. Also, they're opening some new theaters that are coming out. And the big thing in my understanding here is the fact that they're going to be accepting cryptocurrency, starting with Bitcoin as a payment for movie theaters, right? And they are going to also be accepting Apple Pay and Google Pay, and potentially in the future it could go into other cryptocurrencies. I was very interested to hear about this. I thought maybe they would get into the NFT game, so we'll see. I know that Gamestop has thought about that. So that was an interesting thing. And so this actually, bullish on Bitcoin. Maybe more and more businesses in the US will start accepting a Bitcoin, and it will be very interesting. So another big thing, in my opinion, is the release of the movies, first to movie theaters, and then the window that the theaters will have, the 45-day delay, and then it will be out on streaming. And so this is one of the things that I think really brought AMC down during July, right? Because when Black Widow came out and the numbers for the on-demand were, they were big, and then we saw the, Disney and the streaming companies bounce, and AMC stock was going down and down and down and down. And I think the fact that we now know that, 45 days later, especially with Warner Brothers, and they're working on more and more studios to come into this agreement. So I think this will be great, because then you don't even have this on-demand problem anymore, right? 45 days, movies usually die down after 45 days. So by the time it gets to on-demand, it will be people that wanted to see maybe the movie, and now they have an opportunity on demand. So that's going to be a great thing. And he talked about the UFC esports and concerts coming to us. And he talked about the potential of one of the big sports, NFL, NBA, NHL, MLB, and potentially college football, which is very, very popular in the US, coming potentially, right? They're still, trying to do it. And something interesting, he talked about the fact that he wanted board members to have more significant, or some of them don't even have AMC stock. So he's going to put some, rules into place, and especially for the CEO and CFO, the CEO has to own 8 million shares potentially, because it's 8. Maybe I messed that up. 8 years salary, he said, and the CFO 6 years salary. So he said, I think 12 million shares. I don't remember. It depends on what the price of AMC is, but that's just the fact that he would have to make a larger investment into AMC, and all board members would as well. So just makes them more potential having more of a connection to AMC. If you don't have shares, then you're less likely to care as much. And he also said that he's getting up there in age, and he wants to start thinking about retirement. He's going to be 67, and he's going to start setting into place a program where he doesn't even sell. He's going to a third body and and they're going to be selling a certain amount of AMC shares that he owns. He hasn't sold anything since he's been CEO. So he's going to start at the end of the year, probably, dropping a few shares. And he said he doesn't want it to be in a situation where he's selling, because then, when the CEO sells, then people think, well, what's going on with the product here, or the company? Why is the CEO selling? And then there's usually a sell-off. In this situation, he's going to a third party where they're just selling in a specific time and without him even knowing. And this way he gets transferred the money, and it doesn't cause, a big, hoopla when he sells the shares. So that's something interesting that he mentioned as well. He answered all the questions from the apes, and I think that was a great part of the call. I'd rather we do those questions than the questions that the analysts have, because a lot of times they'll ask hard questions about specific revenues and all kinds of things. Then you heard that question. He was like, you know what? After that question, we're going to shut off the stream, right? So we're up. We dipped a little bit at after hours from the high that we had. We're up, though, 4.29% after hours. So that's really, really nice. And guys, all I ask is that you, I deleted by accident BSA. I deleted your comment, so write it again. Sorry. BSA said smash the like button, guys. By accident, I deleted it. I wanted to show it. Guys, I think this was a very good call. We didn't get anything, groundbreaking. We didn't get anything about the shares amounts and naked shorts and things like that. But all in all, I really think that it was a good quarter, beat expectations, 10 new things that Adam told us about the company. Nothing groundbreaking, right? And nothing, game-changing. Well, the Bitcoin actually is a little bit game-changing, but nothing like huge, like they say suddenly, I don't know, we're going to be an unveiling revolutionary technology. No, but the things that they said were very positive in my opinion. Again, remember, I'm not a financial advisor, so I don't have a New York Yankees hat anymore. I have the ape hat, right? In Israel, those are, you can only get in New York or LA hats. So that's a problem, right? Guys, I think we'll finish here. We did the recap. Maybe I'll come out with a recap video later. I'm kind of a little bit tired. I woke up early today, and it's already 1:20 a.m. for me. And price prediction video is going to drop as well. And the call has changed it significantly, I think, my prediction. So make sure to check out those two videos and smash the like button. Check out the swag shop. Check out the affiliate link to Webull in the description down below. And Patreon, if you're interested, guys. Those are all extras. You don't have to do anything. Just coming on and supporting is amazing as well. Guys, thank you for watching. I hope to see you next time. And like I always say, let's make a lot of money.